What would you say in today's day and age is the most important piece of information that investors want to learn when researching a company? Hey everyone, welcome to our latest Traded Black podcast. I'm your host, Shad Dales, and today we're speaking about ESG. What is it? Stands for Environmental, Governance, Social, and it is a top priority for investors today when making decisions pertaining to their portfolio. Why? Well, let's welcome in the president of a company based out of New York City called Suite, which specializes in this. So we bring in the president, Seth Forman, to learn more. Seth, great to have you on. How are things?
Things are great, Shad. Appreciate the introduction, and it's great to be here today.
You're in New York. Not a bad week for Yankees fans. Aaron Judge steps up. First at bat, knocks one out in 40-degree weather. Not a bad time to be a Yankees fan again, right?
Not at all. It's unbelievable how good he is, and for the Yankees and the Yankees fans to have him back and signed
No
a
kidding.
long-term deal and blasting home runs on his first day. It's exciting times in baseball.
No kidding. And hitting a home run in 40-degree weather. The man's got strength, that's for sure. So let's talk about strength as we look at, like I said off the top, some of the things that investors today are looking for. So as mentioned, ESG, which, as I said, stands for Environmental, Social, and Governance. So real quick, define what the E, the S, and the G means in ESG.
Yeah, so as Shad, as you mentioned, ESG, the first acronym there is the E, environment. And really, when you think about the environment, it's related to metrics around things like your emissions, your waste, air pollution, water usage. So it's really bringing together all of your different environmental metrics. The S, social, is related to all of your people-based information, to things like diversity, equality, different policies, trainings that you have in an organization. And then you have the G, which is governance, and this is really related to different policies you have, procedures, things like an anti-corruption policy or an anti-slavery policy or mission statements and purpose statements. And really, and your board, and really across the board around ESG, it's all about transparency and making different types of commitments and setting different types of goals to ultimately share your impact with the world, towards investors and other stakeholders across your organization and externally.
Well, I bring this up because according to Bloomberg Intelligence, global ESG assets may surpass $50 trillion in the next 2 years. So, we've had conversations, especially in the commodity section, about the importance of investors today about having a positive impact on the environment. Is there truth to that? Like, how important is that when it comes to investment strategy for younger investors?
Yeah, I mean, so first off, ESG and the growth of ESG and ESG capital in the markets continues to scale. Today, I've read somewhere around $20 to $25 trillion of capital, and as you mentioned, growing up to the 50 trillion, and it will continue to grow. Why? And it really comes back to, where did ESG originate from? And a lot of it came out of society. And, when you think about climate change and everything going on around the world, you have consumers and people really driving both investors and companies to do more and to really drive change in this world that we're in. We only have one world here. So how do you do that? And so when you think about ESG, it really originated out of institutional investors like BlackRock, who were trying to think about, how do I evaluate companies based on non-financial factors and assess the risk of these companies so that they can make better investments and they can do better in the world and drive companies to have more impact in the world that we're all in. And all of that is driving companies to measure, report on their ESG metrics, and ultimately also for companies to do more and do good in the world. So you're seeing these different dynamics happening, starting with society, driving investors, driving the companies, and now you have more companies that are reporting, and it's creating this really purpose-driven initiatives that in the end is a win-win-win for society, investors, and corporations.
Makes sense. Anthony, you want to
So
add
like
something to
as an
that?
investor, yeah. So like as an investor, and I mean, I look at a lot of these things around the larger corporations that I invest in, especially when you're looking at like S&P or like Nasdaq or any of these like environment, what the company's true environmental impact is on the planet. How can I, as an investor, hold the companies accountable for their ESG efforts, or what's the best practices on keeping up on the pulse on what companies are doing in terms of their ESG initiatives and holding them accountable for what they say they're doing?
Yeah, so it's really good questions. I think in a more simple way, when you think about from the investor standpoint, one of the questions you can be asking companies is simply, can you take me through your ESG strategy and your ESG position? Like, what are you doing?
Yeah.
And when you're bringing that up to them and just asking those questions, it makes it more top of mind for those companies, particularly for the companies in small caps and micro caps, many of which have not actually started their ESG reporting yet. So from an investor side, asking those questions are important, and it increases the priority of it for these companies. I think two, there are a lot of companies that do report annually or even quarterly updates about their ESG policies and credentials. So a lot of them will list it on their different disclosures on their investor relations sections of their website. So as an investor, reading through it, getting a sense of all the different initiatives that the company has, and that's important. And then also for more sophisticated investors, they may actually also look at, there are a number of ESG rating companies that will rate companies based on their ESG credentials. Some of them rate based on letter grades. Some of them rate based on out of 0 out of 100. And they all have different methodologies. Getting a sense of those ratings can be really helpful to easily see and get a sense of how strong of ESG credentials a company has. And even some investors go as far as they'll create their own internal methodologies, pulling in data from the companies, pulling in data from ESG rating companies, sending out web crawlers to pull in all of this data and create their own types of scoring and rating systems related to this. So it really runs the gamut from a simple way to look at it all the way up to more sophisticated ways of looking at ESG scoring.
Yeah, it's funny you mentioned investors actually coming up with their own system. I've been using GPT-4 this week to actually look at companies, comparable like ESG initiatives as well as like data policies. So I mean, I guess technology will enable us to get a deeper dive into that. I mean, when you're looking at companies as an investor yourself, or when you're looking at through the lens of like Social Suite, when you're consulting companies, is there equal weighting like across like the E, the S, and the G, or do you kind of look at the core business and say, okay, this is a energy company, they should be heavily weighted towards the environmental factors, also incorporating social and governance?
Good question.
Do they weight it, or do you keep it? Do you like to see even weight across the board?
Yeah, I in general, you want to see an even weight across the ESG, and a lot of how the scoring companies will and their methodologies work is that we'll give a score across each metric within the E and the S and the G, and depending on different frameworks that are out there, we're talking, you may have, anywhere from 20 upwards of hundreds of different types of criteria across all of ESG, and each little metric may get a score. I think that for investors that are going at this for the first time, or they're early in days of learning about ESG, what's important is looking at, does the company, one, even have an ESG report? Are they, and what kind of measurement, how are they measuring themselves around ESG? I think that's just one indicator, because a lot of microcap and small cap companies don't report today. And so the ones that do, and I hear this a lot from investors that we interview, is that if you're going to evaluate two companies, one that has an ESG report and one that doesn't, and financially they're around the same type of company and they're doing the same type of thing, a lot of investors are going to put more weight and influence into the one that does have that ESG report, because, and then the reason is that because they view those companies, and particularly those management teams, are more proactive They're thinking about these risks associated that they could incur as a company much more deeply and thoughtfully. And therefore, as an investor, there's a bit more trust and they believe those companies and the transparency that they're providing are better investments. And we hear that a lot from a lot of investors.
What do you think's
Okay.
been
Yeah, I mean,
Go ahead, Anthony.
Go ahead, Chad.
I was going to say,
for me, it's a pretty easy calculus. I mean, if you're weighing the two companies and you see one that has an ESG report and one that doesn't, I mean, for me, it's transparency. It shows that they're probably going to be transparent through everything else. And that's definitely a company that I would be giving more merit to.
Yeah,
right.
Which makes sense. We live in a society where like the average, I think, consumer consumes 8 to 10 hours of content every single day on their phone. So when you look at transparency, to Anthony's point, would you say just the times that we're living in now and the information that people want to obtain is the driving force as to why this industry has had such a strong emergence?
Yeah, I mean, I think transparency is really key. I think it's about what I was saying earlier about society and what they're looking for. I think you could also break down investors. We have a lot of research showing how for retail investors, particularly in the small cap, micro cap space, those younger investors, the Gen X and millennials, are really looking for companies that are doing that, that are really leaning into ESG. There was a Wall Street Journal article that we quote a lot talking about how 91% of Gen X and millennial retail investors are willing to invest into an ESG, into companies with ESG based goals, particularly ones that have environmental goals. And so it's really, it's very important for that generation. And I think at the institutional level, who are more ESG driven funds, and we're talking trillions of dollars of capital, and this is really important for companies to realize, is that they're putting out crawlers, they're doing their own analysis. If you don't have an ESG report, they will simply screen you out.
No kidding.
So they're not even going to review you. And we hear this a lot. I was on a panel recently with a bunch of IR professionals at small mid caps, investors that invest into small and micro cap companies, and these are ESG driven investors. They screen out those companies. So it's really important for companies to really lean into this if you haven't yet.
Just another example, Anthony, of the times that we're in, because I know we've had these conversations before in previous podcasts about the emergence of crypto and the blockchain and how everything's transparent. But it just goes to show that investors today, if you don't have the information that they need, they will block you out. They want transparency.
Yeah.
And another example as to why they believe the traditional financial system could be broke, right?
Yeah, I mean, it plays right into the narrative. I mean, transparency is key. And I mean, it's going to play into everything moving forward. Everything from corporate governance to fake news to the financial system, like transparency and everything being public. It works. I mean, we need it nowadays more than ever.
So Seth, talk us a little bit about your company, like Social Suite. Like you've got a long list of companies you're dealing with, and you're dealing with the top exchanges in North America. So walk us through how exactly it works, because let's face it, in today's day and age, you've got about 8 seconds to grab the investor's attention. So am I understanding it correctly? All the information pertaining to a client is all in one cohesive unit. Is that correct?
Yeah, and as a quick backdrop, so Social Suite is a venture-backed ESG technology platform. And so what we do, we specialize in working with small cap companies, micro cap companies, and private companies, really help taking the complexity of ESG reporting and making it simple. And so we have about 100 public and private companies on board today, and continuing to grow as we go on. And so a key thing that we bring is really helping these companies that, they don't have chief sustainability officers. They don't have ESG leads in the company. They don't have a multi-million-dollar ESG budget like the large caps and like the large caps do. And the problem is that the certain institutional investors and folks out there are pushing down on them, saying, "Hey, you need all this information," and so they don't have the resources to do it. And so that's where Social Suite comes along, as we help them. We provide them guidance. We provide them a full platform to help take them through this process in a more phased approach, with being cost effective, and ultimately helping them report on ESG, track and report on ESG. So the final output for a company is a really beautifully looking report that they can then go and provide to their different stakeholders, to their investors, to their employees, to their customers, to really help them across a number of levels. And then you also have the regulatory changes that are going on and help them comply with certain the regulatory environment that continues to evolve. And so for all these reasons, we help them through this process.
Would you say there's any specific categories or industries that are like leading the way in this integration versus others? If so, what are they?
Yeah, so in certain industries like mining and energy, they've been asked to do certain aspects of, particularly the E of the ESG, for many, many years, given
Sure.
The types of what they're doing as businesses. The recently, particularly across all of ESG, and from the investor side with mining companies, and you look at, like, let's take battery mineral companies. One thing, when you think about mining, there are certain PR perceptions that are created when you think about a mining company across, the society. But when you think about this EV transition that we're going through, one of the most important transitions globally that's going on. I was talking to someone at a conference recently, said that the transition that the world is going to related to EV transition and electricity and moving away from fossil fuels is the biggest global transition since when light bulbs were created, when electricity was created. I mean, it's that big of a transition. And so, when you think about what's going to drive this transition, it's mining, it's battery minerals. You can't make this transition without the battery mineral industry. So what we're finding is that sector in particular is really, in many ways, taking a leading push around ESG because they invest into their local communities. They're doing a lot of work to save on water, to save on electricity, reduce costs. We work with a number of battery mineral and mineral mining companies, helping them through this process. So that's one sector, energy in general. Then you have sustainability companies. Of course, given what they do, they're certainly leaning into ESG. And then you're starting to see a lot of other sectors now come online because, again, going back to investors are asking for it. You have compliance reasons. You now have large cap companies that are pushing down in their supply chains for all of their suppliers to start to report on aspects of ESG. So now you're seeing all these other sectors come online, technology and software. You're seeing manufacturing and pretty much every sector is starting to really lean into this, given all the influences in the market.
Yeah, on the I guess on the company level, are you seeing companies that really start to, I guess, put their head down and really focus on ESG as a form of as in like an after effect of like crisis management, or are you seeing a lot of companies being like proactive and starting to really get this down from day one as something they should be doing from a governance perspective?
Yeah, it's I would say it's a mix. I think we're starting to see a lot more companies being more proactive because they're trying to prepare for the changes that are going on.
Yeah.
The SEC next month, May, in a big asterisk, may pass a climate disclosure ruling, the first of its kind, which will require every public company to start to report on different climate-related disclosures. Now, there's going to be a phased approach depending on the size of company. That could pass next month. So a lot of companies are starting to prepare for that. If you're a company that does business in Europe already has ESG-driven requirements. And so you have to prepare for that. And pretty much every country in the world is looking at this in different types of way. Yeah. And so so you have the ones being more proactive around compliance, being more proactive for their investors. But reactive happens too. I mean, we just signed up a company that's a NASDAQ listed small cap that came onto Social Suite because they got two of their big customers in the banking and insurance industry. We're asking them to provide certain types of diversity metrics, certain types of emission information. They didn't have it, and they don't have a chief sustainability officer. So they came to us to help them through that process. So that was more of a reactive
Yeah.
approach. So you see both, and I think we'll continue to see that.
What would you say in today's day and age is the most important piece of information that investors want to learn when researching a company? It's a broad question, but what's the most popular thing that comes up from time to time?
I think as it relates to ESG for investors, I would say one for the size of companies that we're talking about, do they even have a report? Are they even thinking about this? I would say that's
Mm.
number one. In terms of a specific metric, probably it depends on the industry. If you're an investor that invests into a lot of mining companies, I would imagine you want to see a lot about what they're doing with their local communities. And there are certain aspects of ESG and governance criteria that ask questions about what they're specifically doing around local communities, given that's so important for your mining, whether you're an exploration company or larger, because of given what you're doing in those local communities. So that's a really important metric. I think for certain, if you're investing into energy companies, the emissions and the plan that these companies have of how they're planning on reducing emissions for certain energy companies is really important that investors should be looking at. I think that the other thing with mining, some of the social aspects of certain transparency related to how they're handling their people, especially if you're doing mining in different countries around the world, whether it's Africa or South America, like you want to understand and have transparency on
100%.
what they're doing and their policies and procedures are related to the people within the organization as well.
So, on the flip side of that, if I'm a CEO and I'm watching this podcast, what advice could you give when it comes to developing and improving their ESG strategies in order to, I guess, have a better position themselves in the market?
Yeah, well, I think one thing that is in a way that we hear from a lot of CEOs and boards is that when they hear about ESG, there's this immediate, like almost like an overwhelming nature to it because a lot of people don't fully understand what it is and they don't want it to be a distraction to their business or anything like that. So part of it is, and one thing that we take companies through is that particularly public companies, in many ways, they're sometimes 20, 30% of the way there, given all of the public disclosures they have. Their different policies, procedures, their different purpose statements. We sometimes will review their employee handbooks. In many ways, they're already on that path. It's just all the information scattered everywhere. So part of that first steps with us is just compiling it and
Yeah.
showing them like, hey, you're actually already on the path. You just don't know because you haven't matched this against a framework. You haven't worked with anybody around this. So that kind of gives them a head start. And then from there, it's really about designing a program that best fits their needs to progress and ultimately to report. And more importantly, to continue to measure it and ensure that what you're committing to as a company as it relates to ESG, you're going to deliver on, because that's really important as well. So in general, it's guiding them through. And the other point I'll make is that for companies at the executive level to have really successful implementations, it does take alignment with your board, alignment with the executive team, that they're going to actually go through this process. Because when, in some cases, if it's asked of like an IR person to go and push forward on ESG and they don't have board and executive alignment, it'll get stuck. It's really important that you have that alignment across the executive and board.
Yeah.
And when you have that, it really drives the process forward.
So what
Well,
would
as I
you
said earlier, go ahead,
what would you
Anthony.
say to people that are let's say skeptical about ESG? I mean, I've seen people kind of take the other side where it's like I'll use Nike and Apple for examples. So have more resources than God when it comes to money. I'm sure they have ironclad ESG policies, but you look at someone like Apple, and as of recent, like the cobalt mines that are in Africa that people are starting to uncover are having child slaves that are mining the cobalt. I mean, that's finding its way into their batteries, which obviously is not on purpose, but they haven't really spoke out about it. And like Nike, for instance, like with the Uyghur stuff that was happening in China, which is you could take either side of it, but it's a blatant human rights violation. Yet they probably also have an extremely strong, ironclad resource-driven ESG strategy. What would you say to somebody like that that wanted to take that side of the argument?
Yeah, I mean, I think that that's where there needs, when you think about ESG in general and the how long it's been around, it's still really
Hmm.
new, right?
Yep.
So part of it is that the part of the misconceptions in the market, there's a lot of divisiveness going on, and particularly in the US market around ESG in terms of what it is. Part of it is that
Yep.
there's a lot of confusion around what it is. And because of that, that creates a lot of different viewpoints and that it's
Hmm.
new. So I think as an umbrella arching, more of an overarching factor around this, it's around the confusion about what it is. And I think the industry needs to do a better job of explaining and describing what it is, what specifically it's here for, and how it can benefit society, companies, investors. To the point that you're making around the specific, that's more of a supply chain examples. I think a lot of organizations just recently in the last year or two, anywhere from General Motors to Apple, Tesla, and many, like they're really starting to do a much better job at organizing their supply
Yeah.
chains to track and measure and get transparency across their suppliers to the point where we're starting to hear that certain large caps are going to be putting in incentives down into their supply chain. So if you're a supplier to name your large cap and you're able to reduce your emissions by a certain point, you may get certain incentives.
Interesting.
Maybe it's more product or more maybe lower price. There's a lot of incentives that they're discussing. Or conversely, we're starting to hear that if you don't hit certain benchmarks, they may not work with you anymore. So
Yeah.
if you're a micro cap or a small cap and you're selling your products up to a bank or a financial institution
Yeah.
or automobile manufacturer, and you don't start thinking about ESG and getting your reporting together, you may not be able to do business with that company anymore. And that's where the industry is going. So as all these things come into play, that will reduce certain incidents that you're bringing up, Anthony, that become highlight reels in the media, which obviously isn't no one wants.
Yep.
Yeah, because I feel like
Time.
ESG on a small cap, micro cap, mid cap level, I don't want to say it's fairly easy, but it's easy to kind of like understand the breadth and depth of your company to where you're covering all the bases. Somebody like a Nike, someone like an Amazon, someone like a Tesla, I mean, they're so big and they're so far spread out that there truly can't be oversight over everything. So, and I think that is a common misconception that people think just because a company is, let's say, all in on ESG or has this very powerful ESG policy, that it's all encompassing and that something can't happen outside of it, which is probably just people wanting a little, or expecting a little bit too much, and also, like you had said, being a gross misinterpretation of what it actually is.
Yeah, and to that point too, it's for the for the small caps and micro caps. It's about also keeping it simple. You
Yeah.
don't need a report on every metric, and that's part of the like also the misconceptions in that they look at ESG and like, oh my God, I have to do 400 different metrics. I have to do this every year. I have to spend tremendous amounts of my time and money, and that's where companies like Social Suite have really tried to focus in and help these companies with only reporting on the right metrics that are going to have the biggest impact to get to you where you need to go versus doing everything, and that's also part of the confusion in the market, and that in a way the uh, misalignment from the large cap down to the small caps because these are completely different companies with different resources.
Times have changed, that's for sure. And it's something you're going to have to embrace. And most importantly, you keep companies accountable because that's what investors are want. And if you think this is going anywhere, I actually read a recent survey which was conducted by Accenture of more than 25,000 consumers across 22 countries. 50% reported they have realigned their priorities when shopping for brands as a result of the COVID-19 pandemic. So I would think that the pandemic has definitely fast forwarded this overall narrative too. Do you not think?
I would imagine significantly, I think, and going back to the retail investors, I think that we saw a lot of retail investors come into the market
Yeah.
during COVID. They have more time, they're more time at home, they're researching more companies, and a lot of younger retail investors that absolutely care about ESG, as we talked about earlier, and they want to see that from these companies. So I think it had a massive effect.
100%. We want to hear from you. What are some comments that you want to leave below on information that you look for when you're going to invest potentially in a company? Let us know. We'll reach out to Seth. We'll get feedback to you. Ask us anything. And like I said, subscribe to our channel at all times. Seth, appreciate the time. This has been very helpful and educational as well. Anthony, thank you very much. And let's keep this conversation going, because I think that there's a lot of stuff that I think investors that constantly reach out to us that they're always looking for and wanting to learn. What are key things that I think they should look for each and every time? So you'll be a wealth of knowledge when it comes to answering some of that stuff. But most importantly, we appreciate the time.
Thanks so much, Chad. It was great to be here. Thanks, Anthony, and appreciate the time. And for those looking to get more information about ESG and about Social Suite, feel free to go to our website at www.socialsuitehq.com, or feel free to reach out to me on LinkedIn or on my email at seth@socialsuitehq.com. Thank you so much.
It's great. Appreciate the time. Let's keep in touch.
Thanks, guys.
Thank you.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel, because we would not be here without you. Thanks for watching, everyone.